Welcome, everybody, to our Long Options webcast. I'm Connie Hill. Happy you joined me here today. You know, long options are one of the first option strategies a lot of traders learn. Okay, today we're going to focus on our targets. We're going to focus on targets for either if the stock moves decent, makes a big move, stock moves fairly small, or the stock goes the opposite way of what we think that it's going to do. Okay, so we're going to talk about locking in and setting each of those types of targets when we get into the trade. Now, I am joined in the chat, I think, by my fellow redhead, James Boyd. Happy James is here. He's been trading options for a little bit. Probably a little bit longer than a little bit. I think he was a mere child when he started. In any case, if you have questions, let us know. James will be there to maybe field some questions I can't quite get to, but we do want to know what your questions are. So chat them in, and I'll keep my eye on the chat as well. If you're listening to this on the recording, and I know lots of you do, when you have questions, write it in the YouTube comments, because I go back and look at those throughout the week and make sure that you get your questions answered as well. Let's go through our disclosures and get into our agenda here today. Options carry a high level of risk and are not suitable for all investors. What we talk about today is for information and educational purposes. Don't consider it a recommendation. We'll be using the Paper Money software application. It is for educational purposes. I think it's a fantastic tool to refine rules, to decide how you like to trade things and learn strategies. So take advantage of that, okay, that paper side of things. When we talk about rolling orders, they can entail additional transaction costs, so you want to be aware of that. But when we talk about probabilities, they're theoretical in nature, never guaranteed. Past performance is no guarantee of future results. Bogus wants to know if the presentation has started yet. Maybe I'll chat into him. Yes, Bogus, we have started. All right. We want to talk a little bit about long option concepts and what that might mean in our case to determining targets. All right. Anytime we're talking about these options, we'll talk about the concepts of price, time, and volatility, because those are the things that impact an option the most in terms of its price change. And I want to review a couple of trades that we did a couple of weeks ago, rather. And then I've got about 4 or 5 new trades outlined that I would like to get to. The concept I want to talk about here with long options is the idea that we're looking for a quick move. And if the stock does not move quickly for us in the direction we think that it's going to go, we probably want to minimize our losses and get out fairly quickly. And so one of those concepts we're going to incorporate into one of our targets, which is going to be a stop. One stop that I wanted to review with you here today, because it applied to our trades that we did a couple of weeks ago, was the idea that if the stock doesn't move half the way to your target in half the period of time that you thought that it would, time decay starts eating away at the price of that option. And so you might want to consider just manually getting out. Now let's head on over here to Thinkorswim and just take a quick peek. Okay, looks like the SPX is up nicely there, about 0.79%. NASDAQ was up even higher earlier. Let's go NDX here. Yeah, it's up, I guess, 1.7%. So it's the index that is moving the most. Russell 2000, it's up about 0.5%. And the Dow Jones, it's up nicely here as well, up, what's that, about 0.35%. So looks like all the indexes are in sync with each other, but the biggest mover is definitely on the NASDAQ with some of those NASDAQ stocks. Now, a couple of weeks ago, I appreciate Ben. I think it was Ben that filled in for me last week in our class. Appreciate him filling in. And the week before that, we had put on 2 long option trades. And we were still actually in these today up to a certain point. So let me just kind of bring this down here. We had put in one on Capital One Financial and one on Altria. Okay, let's look at Capital One first. And you're going to see here our P&L open is 0 now, and our quantity is 0, but it's still sitting there. because we were in the trade today. So on Capital One Financial, let's go take a look at the chart. And you can see today it was down about 70 bucks, yesterday or today on Altria about 100 bucks, but let's go to COF first. And on COF, we were getting in on this move here. And we were looking for the stock to move up to about that 211 range. We put our target in there at 211. And man, it got close to it a few days later. Initially, it went up, it pulled back, didn't ever hit our stop, ran up again. And man, it was close here. And so it kind of gave us the idea, oh, well, maybe it will continue with some follow through the next day, maybe make it to the target. We did adjust our stop loss. We raised it up so that if we were wrong on the trade, that it would get us out at least either with a smaller loss than what we anticipated initially, or maybe even tying a little bit of gain. On this particular one, you can see it only had 2 green candles compared to 3, 4, 5, 6, and 7 red candles today. So if we're talking about, is this thing moving the direction we need it to? It did for a little bit, and then it's kind of stopped doing that. Sometimes if a stock gets pretty close to your target, you might consider revising your target. Okay, for example, the high here got up to 210 and 10 cents. So a buck shy of our target. That may have been a consideration when we saw it starting to slide, maybe to get out a little bit early. Honestly, I did not check it that closely. Okay, these trades you do need to keep on. But let's go over here to our account statement here. So we got into this trade for 1160. It went and hit our stop loss today and filled our stop loss. Let me just show you the parameters we had in here. We still had our 211 target, or if it got below 201.48, which was a low point on the 25th of June here. That's the date we put that, adjusted the stop loss, okay? So we ended up losing a little bit on this trade. Okay, so we lost 10 bucks. Not, not too painful, but our opportunity cost, had maybe been watching a little bit closer here and decided, a buck away from the target's not too bad. We could have come back better on this particular trade. Chris says back to the bottom. Was it a rejection back to the bottom of the range? Hope it's not going back to the bottom of the range, but you never know. I'm glad we adjusted our stop loss. On the 25th is the day that we changed it, which was this day here. So the day that it made the big progress, and we moved it so it was just below the low of that day, and it finally hit it here today. Now let's look at Altria. Let's just look at the chart here first, and then we'll go through the numbers. On Altria, it was trading in this triangle. And initially it broke down out of the triangle. It didn't hit our stop here, and we didn't adjust anything. It was so close to this line that I thought, let's see if it comes back, especially on this day when it put in a hammer-like candle, which typically means reversal. And so it did. It reversed and it headed on back here. It looked like yesterday maybe it was going to break out of the triangle, maybe had even a little bit more upside potential. Today, it came back down inside the triangle, which makes this look like, well, maybe it wasn't really that great of a breakout. The volume is a little bit below average, so it didn't do it on huge volume. When we see breakouts of patterns of resistance and it has volume, then it gives us the idea that maybe it's going to continue. In this case, it didn't, so I just manually got us out of the trade. I just said cancel whatever orders are in there. It is starting to show too much weakness, too much retracing. And so on this one, we bought it for 370. We ended up getting out today at 570. So that one was a $200 gain, which for 2 weeks in the trade, typically would want to have a little bit more gain in that. Okay, but you take what you get, right? Didn't hit our target and pulled back from it. So that's the way it goes. So let's see if today, as we work on our targets, if we could program something in the exit orders to say, hey, if it makes a big move like I think it might do, let's get out there. What if it makes a smaller move? Let's get out there. Or if it is a stop loss. So we're actually going to put on 3 different exit points on each of our trades here today. All right. Looks like we're coming along okay with questions. All right, looks like we're in good shape. If I missed your question and it gets lost in the chat, go ahead, chat it in again, okay, and I'll pick it up. First one I want to talk about, and all of these, I should tell you, came off of our liquid options watch list. We created this about 3 weeks ago, earlier in June, and it's a watch list that should have pretty decent pretty decent volume activity, pretty decent open interest. Some of the stocks are a little bit more expensive on this list. Some of those might not be applicable to some of you. You might go, I cannot trade a $700 stock or a $500 stock. That's completely legitimate. Yeah, make sure you stay in your price range. Now, the first one we're going to take a look at here, we're going to see, I have several lined up. So if it looks like it's not as good as it was initially, we'll take it off. But what we're seeing here, and we're seeing this at a few semiconductors today, is some breakouts. This is more of a short-term breakout. And what I have here is I have really an ascending triangle, which is a bullish continuation pattern. So we can see the low points here getting a little bit higher and a little bit higher. And then it had some horizontal resistance here, which is what makes up the triangle. And I put in the height of the pattern. Now, I started the line here to tell us the height of the pattern when it hits my second line, meaning it hit the first line down here, the first line in the triangle, but it didn't hit the second line until this candle here. And so then I just kind of drew in a vertical line there that gave us the height of the triangle. I made a copy of it. All right, you can do the duplicate drawing for those who aren't familiar with it, stick it on here, and you would put it where your breakout range is. And I'll just stick this over here, kind of out of the way. And that would be our potential target for this particular move. It has a nice breakout of the resistance here. It is a little bit earlier in the day, so I'm not surprised that it's not up to average volume yet. Maybe by the end of the day, it'll be there, or maybe a little bit beyond. But a target here on this stock, if everything went fantastic, would be up in the neighborhood of about 468. And let me give us a little bit of room here. All right, so 468 is going to be our target there, and that's if things go great. What if things don't go great? What if it breaks down? Where would we want to stop? Well, on a triangle like this, we would say, hey, if it closes down below the support area, it's not a true breakout, it's a fake out, right? It's not following through with what we thought it might do. So we want to get out of there fairly quickly. A couple weeks ago, we talked about setting up reward risk ratios. And we're not going to take the time to do that today, but if that's a process that is helpful to you to make sure that it's worth your while to do it, to do the trade, then absolutely go through that, go through those steps, okay? In this case, we want to focus a lot on targets, so I'm not going to make you go through that exercise today. But if things were to go wrong here, I had said, if it goes, say, 2% below maybe where this line is for our initial stop, we probably want to get out. Then if the trade progresses, we'll want to increase that range. Now let's pull over here. My calculator moved on me. Let's get him over here in a good spot. All right. So on this, 410.78 is what should act as new support, right? Because it's breaking through the resistance. So 410.78 times, I'm going to go 0.98. That's just going to be 2% below there, is going to be 402.56. So that is going to be our stop loss here. I'm going to kind of write that in here, 402.60. I think it was 66. Not the right number there. 56. All right, 56. That is going to be our stop. So I'm going to put the S there. Our first, where we said our target was going to be, was about 468. So let me just write that in here. 468 is if it hit a good sized target. And I'm going to call that target 2. What should we have as target 1? Okay. Target 1 is going to be this. I had a conversation, and this has been quite a reasonable time ago, talking to somebody, and they said, I am not greedy. I think we probably all want to think of ourselves as not being real greedy. She says, I am not greedy. If I can make 30% on an option, and it can do it pretty quickly for me, I'd be happy. If it does it the same day, great. Things don't always move 30% in the first day, right? But she said, so I'm not going to be greedy about things. Now, you may have a number in your mind where you say, well, if I make X% on a long option trade, I'm satisfied. I'm not going to be, quote, greedy. Now, Chris has a real good question in here. It says, what's a reasonable percent return for options day trader? I'm going to say you're going to have to do some paper trading with that, Chris, and see where the stocks that you're using seem to go. If you're using stocks with high beta and lots of volatility, they might go further or longer, some of these targets, than maybe something that isn't quite as volatile, isn't one of the high flyers. Maybe it's kind of a steady Eddie type of stock. Okay. So you might need to do some trading with that. But yeah, if anybody wants to tell you what they think is a reasonable percent gain, absolutely throw it in. For this trade, we're going to go 35%. Okay, so our target 1 is going to be 35% beyond whatever our entry price is going to be. Okay, let's go ahead. Let's place this trade, show you how to put 3 different targets in here. This has some weeklies here. I do like the liquidity in these monthly options, 52 days. If we think it shouldn't take many days to hit the top here. Okay, 52 days should give us plenty of time. Typically, we might want to see, if I think the trade's going to take 2 weeks to hit a target, or you want to give it 2 weeks and then add on a month's worth of time to help minimize those time decay issues with the theta, right? You might be out here picking one of these weeklies. Okay, you might look at August 7, maybe even July 31, depending on how quickly you think it could hit that target. But if the liquidity isn't there, and say like on these August 7s, there's just not a lot of liquidity there, then many traders will just say, I'm just going to drop down to the next monthly. There's lots of liquidity there, and not worry about, gee, it's going to be a little bit more. Now, these are expensive options, okay? The stocks at 434, and so yeah, these are expensive options. And they have quite a bit of implied volatility priced into them because these stocks have been some really big movers, okay? We're just going to go with our at the money strike price. And right now that looks to be 430. All right, so we're going to go with our 430 here. And we're going to build this trade out. And for all the steps we're going to do, you have to build it out manually. You'll see what I'm talking about in just a minute here. Hopefully we could get it somewhere in the midpoint price, right? Not necessarily paying a full 60 bucks for it. We'll fiddle with that as the trade goes on. All right, next up, we're going to say a first triggers OCO. We're going to put in 2 opposite orders here. So we're going to say create opposite, create opposite. Now I told you we're going to have 3 targets, okay? So, but I've only got 2 lines here, okay? So this is how we're going to make this work. The first target we're going to have based on the price of the stock, and the second target and the stop loss. Okay. So along here, instead of having a limit order, we're going to change it to a market order. We're going to make this good till canceled. We're going to make this good till canceled. And we're going to use this first line that's intended for a target. We're going to put in those 2 prices. So we'll put in LRCX. Likes to use that mark price, right? Because that's the in between the bid and the ask price. So it's maybe is not hitting a way outlier of maybe say an ask price or a bid price, okay? And on this one, if it's less than or equal to, let's go our stop, 402.56. That's going to be one of them. And LRCX, the mark price, is greater than or equal to our target 2, 468. If you wanted to play around with that, if you wanted to do something maybe slightly lower than that, say 467.90 or something in that range, you certainly could. Now let's make sure our arrows are really pointing the right way. So less than or equal to 402.56 for our stop and greater than for our target. Okay, that's where two of them are going to go. Now this next one I'm going to show you, you might want to do the math manually, or you might want to take advantage of doing it the way I'm going to show you, which is a little bit mechanical, okay? What we're going to do here under this link column for this one, actually this one, the second one down, we're going to change that man to a trigger. And we're going to say on the trigger, if we can get 35% better than what we get filled at, then we're happy to take our gains and get out. So not 350, but 35. So 35%. So whatever we get filled at here, which I said, let's try to maybe get filled at a midpoint price, it will just base that target on what 35% of whatever our fill rate is. Now here we can see, let's unlock this. Natural is still looking like about 60, midpoint's about 58. We're gonna just maybe try to see if we can get filled at, I was gonna say 59. Okay, see if we can get filled at 59, and then it'll take 35% of the 59 price, not this, not the 60. Good till canceled on both of those. And just a day order on this, we hope to be filled before our class is over. Hopefully that'll go quickly. And we're going to put this in our long options grouping. Send that off. All right, we got filled on it. Now this is what I want to show you over here in the monitor. You're wondering about that percent of 35%. Well, what would that calculate to? All right, is it going to calculate to 79.20? Okay, that's what it will be looking for as far as the limit price. Okay, I like that it calculates this for us because it kind of gives you some peace of mind that, okay, it's in the right spot, right? Now, if you want to do 20%, if you want to do 30%, if you want to do 100%, it's totally up to you. I'm going to take that to be the smaller move, and I'll take the target up at 468 to be the bigger move. Now, if it dilly-dallies around, doesn't move quickly to the target area, say that 468, you know what, 35% might end up being the bigger part of the order. And maybe if it jumps up there to that price, maybe it fills at less than maybe what this 35% would be. Okay, so we've got two of them in there depending on what the stock does. All right, any questions on that? Sam is saying, is our rate of change requirements? For us, we don't necessarily have any rate of change requirements. However, over here in my watch list, this column is a 1-month return. This column is a 3-month return. These stocks are, well, this stock is really moving. Not all of them are moving that big. Okay, some of them might be being some big movers right now. So you could basically take that information and decide for yourself, is that an acceptable rate of change or not? You might come down here to CrowdStrike and you're seeing 1 month is down 2%, but 3 months is at 91. You might be going, I need to go check this out. Is it starting to break down? Or did it maybe have a big pullback and now it's just kind of getting back to where it was previously? Okay, you'd want to identify that or kind of analyze the chart. Okay. Next up, Sam says $6,000 for a long call. That is expensive of an August expiration. And stop out at 420 via conditional order. Okay, so I think Sam has maybe a different way that he would want to set it up. That's not a problem at all. That's great, Sam. Appreciate you sharing that with the class here. All right, let's take a look at another stock here. This might be one that you've traded. It might be one you haven't traded yet. We're going to look at SpaceX. Obviously new. Obviously not a lot of data to work with. We don't have a 30-day moving average on it. It hasn't been trading for 30 days. We could get a 10-day moving average on it or a 5-day moving average. But right now, not really seeing this. And interesting down here, that's interesting. The volume is not showing. I wonder if it's because we have that average in there. It could be. Let's do this. Let's change the length to 5. We'll see what's the volume over the last 5 days. We'll see if the volume will show up here. There we go. Okay. It didn't because that volume was set to over the last 30 days. Okay, so it looks like maybe volume's tapering off. Not seeing it here for the first couple days, first 3 days or whatever that it traded. All right. Now, interesting on here, we don't have a lot to go on, but it looks like maybe around what? Maybe around this area, around 148 or so. Seems to be a decent support level for the stock. However, you might not want to give it quite that much room. Okay. You might say, okay, yesterday we had basically, this wasn't really a hold because it didn't really drop, didn't really make a flag. I mean, yeah, it is a drop from starting up here, but really I would say this maybe was the first day in the bounce that looked like, okay, it's getting beyond this consolidation region. And today it's up just a little bit more beyond that. So on this, what if we were to do this? What if we were to say for a longer target, maybe not clear up here at 225, maybe that's a little pie in the sky. What if we were maybe to look at the midpoint of this red candle and maybe where it opened up here? Okay, many times the midpoint of a candle can act as support or resistance. So that's why I'm saying, hey, what if we were to put it up here somewhere? I had initially saying about pretty close to where it is. I had said 201.50 in my notes as far as the bigger target. Okay, so let's change that T2 to 201.50. Okay, then what about a stop? I mean, if you're willing to come down here and give it that much of a move, you might feel comfortable with that. In this case, we want this thing to continue to go up. And if it starts showing weakness, we want out of it. Okay, so we are going to put a stop. We could use today's low or I don't want to use yesterday's low. That's too much. Maybe we go, say, a little bit below today's low, give it a little bit of wiggle room. How about, what if we just call it 160? All right, put our stop here at 160. Or we could put it at let's go 159.90. Right? Get off of an exact even number on a stop loss. Right? Sometimes there's automated orders sitting out there at even numbers and stuff. Sometimes traders will do that. Okay, so we're going to say if it goes to 159.90, a little bit below today's low, we're out. We're going to say the midpoint of this candle for a decent target, a longer target, and then we're going to use 35% again. Okay. If this stock were to take off quickly and take off up here, I think that would be the larger target. Okay, going beyond, say, 35% gain in the price of the option. However, like I said, if it dilly-dallies and maybe doesn't come down and hit our stop, maybe it's just like gradually moving along here, it might be that the 35% is the one that gives us a bigger payout. Just depends on what that stock decides to do. All right. Again, we're going to use the August options. We're going to come down here. We're going to go at the money again. So it looks like 170 is going to be our at the money choice. Again, not quite as expensive as LRCX, but these are expensive options. Okay. So something in here around maybe midpoint of 1890. And again, we're going to build this out. We're going to do a 1 triggers OCO. We're going to create 2 opposite orders. I do want to tell you one thing here. If I had chose from here by custom with OCO bracket, it will only allow for market and limit orders here. It won't allow for triggering orders, okay? And that is the reason we're building this manually, is I want to do that 35% of whatever the fill price is as a trigger order, okay? If you didn't want to use a triggered order, then you could just easily say, pick OCO bracket, okay? And just fill it out that way. All right, we're going to do the same thing here. We're going to say, make this a, well, we're going to go good till cancel, good till cancel. We're going to make this a market order based on 2 stock prices. Come over here to our gear and let's put in our big target and our stop. Okay, so our big target greater than or equal to is going to be 201.50. Okay, that would be a move of about 40 points, which is a pretty decent sized move on a stock. $200 stocks, SpaceX, mark again, and then we'll put in the stock price of 159.90. Now, the idea here is we're not going to be satisfied to just always keep that stop in place. What's it doing here? Let's try this. There we go, 159.90. We might want to inch up that stop loss as the trade progresses. So we've got our stop, our big target on that first line, and then on our next line, we're going to take the man, we're going to change it to a trigger. What do we think we could get filled at here? This is showing midpoint price here, like between 19 and 1935. Say 1970 now. Let's maybe come over here, 1945. All right. That messed up our trigger here. Let's take that back to 35%. All right, we're going to try it at 1945, and we're going to submit this. Again, we're going to put it in our grouping for our long options. All right. Yeah, Sam says, maybe you could count that as like a hold type entry on SpaceX. Yeah, you could. It's not ideal, but it is definitely giving us a bounce there. Definitely a bounce. All right. Who's feeling a little bearish? Anybody feeling a little bearish? We're going to do a bearish trade here. Now, generally, we do want to follow the direction of the overall market, the direction of sectors and industry groups, not really fight that tide. But a stock that's having some weakness just broke some recent support here on the downside is PepsiCo. If I were to show you a little bit longer chart here, say 6 months, kind of peaked out here about 171. But then the most recent, 3 months here really had some major weakness, and it broke through a nice support level here today. Now I went back in time to see, well, where could it maybe drop to? Okay. This is kind of a long shadow here that kind of lines up pretty close to where the price is here, but really the next significant support area down is around this 127-ish area. Okay. So stocks at 136 right now, down to 127. That would be a nice little 9-point move. Okay, so percentage-wise, that could be pretty decent. So let's make that be our big target. Okay, so our big target number 2 is going to go 127. And let's maybe go a little bit higher than that. Let's go 120. Let's go 128. Okay, 128.10. Okay, so just a little bit above where that support level is. Again, we're going to use 35% as our kind of hopefully a shorter term. If it makes 35%, we'll be happy and get out. All right. And then our stop. Let's come back here to our 3-month chart here. Now, Pepsi does have earnings coming up. It looks like they're on July 9th. So ideally, we'd want to be out by July 9th. Okay. We'll watch that, make sure that we are. They announced before the markets open, so we'd actually want to be out by July 8th. Okay, we'll keep our eye on that earnings. But where would we know we're wrong on this? We could know we're wrong if it does what? Breaks above this support area. Now, it's got a pretty long size candle on it here today. So a pretty clean break. Again, it's still a little early in the day to know if we're going to have above average volume or not. And remember, I changed this to the last 5 days average volume. So it is up a little bit higher, probably bringing that into consideration. In any case, if it were to come up here above the support line, we'd want to get out. Now, I had called this before our class. I had said about where my mouse is right there. I had said about 140.05. This is 140.11. We can go with 140.11. Let's put that in here into our stop. Okay. Yours, where you decide if you wanted it somewhere different, you could. If you wanted to give it 2% above this area, you could. In my mind, is really reversing and not following through with the breakthrough if it closes maybe not a penny above where the line is, but a little bit of movement beyond, then it looks like it's a false breakout. So let's go plug that in. Let's see. Sam says just swing and a miss on Pepsi, not looking. Because of those earnings. Oh, somebody's concerned about the earnings. Yeah, we're going to keep our eye on that earnings date. All right, let's line it up. We're going to go on the put side of things here for Pepsi. It's at 136 right now, so 135 is going to be our at the money option there. Lots of open interest, which we're always happy to see. Let's go ahead with that 135. And again, we're going to build this. First triggers OCO. Create 2 opposite orders. And let's do the same thing here. Let's do this one based on the trigger. We'll just stick in the trigger first. Change that to the percent. We're going to change that to 35% of whatever the price of the option is. If you wanted it to be 50% higher, you'd plug in 50%. You need to get rid of that extra 3 there. There we go. Now on this one, we're going to change that to a market order. Both of these are going to be good till canceled. And then we're going to put in the big target, what I've been calling T1, and the stop. All right, so because this comes in this direction, less than, well, actually on this one, this is going to need to be our stop, 140.11. If the price of the stock gets up or higher, 140.11, or if it goes down lower, or lower to our target of 128.10. Okay, so stop on top, which means, let's see here if we've got this right. Less than or equal to, we've got to change that over. Is that right? Our target is going to be our stop, because if it pops up greater than 140.11, it's not going the right way. If it drops down, heading towards 128, then that's where we'd want to be out on that larger target. And this one's got to be less than. Click on the right direction. There we go. Less than or equal to 128. All right. So 2 bullish trades, 1 bearish trade. Let's go ahead, set this up. Make sure nothing changed on us. Things are still looking good. The The midpoint price looks like it's a little bit lower. Let's see if we do get filled closer to 420 rather than that 430. And then we'll put this in the long options. There we go. Okay, got filled a little bit nicer price, 420. It'll go calculate what was 35% more than 420. And that'll sit out there in our working order. We open that up, we see Pepsi, and that'll be a value of 570. All right. So maybe a little bit different way to do things than maybe what you have done in the past, where we're saying if it makes a big move, get us in there. If it makes a small move, get us in there. Our bearish trade was T-Mobile here, TMUS, or rather Pepsi. And then here's our SpaceX, here's our LRCX. TMUS is not in the mix right now. Okay, any questions on that? If so, let me know. Let's see. Some questions about Snap Business. Okay. You guys are talking about James' clothing, his green shirts, his pajamas. He needs some green pajamas. The way the market's going, yeah, we all might need some green pajamas, right? Now, I do hope you're all subscribers to our Trader Talks channel. That lets us find our content that we publish. That helps you find it easy. Now, we can see right now, long options is up. Let me just refresh this real quick. I was on the playlist. I'm going to go over here to the home. So our long options is up next. Mike Fairborn's going to be up next with swing trading. Let's see if James is here. Oh, would you look at that? James is going to be up here with growth and value stocks. That is a fun class to be in. James, growth and value stocks. So that'll be coming up here. I'm going to have to click on it to see the time. Oh, you know what? I went too far ahead. That is into tomorrow. Okay, we'll be excited for that class tomorrow at 9 a.m. Eastern. All right. Follow James and I on X. Would love to have that. We post educational content, things we're noticing in the market. We post it out in our X account. It's also where you can find scripts that we're using as we post you at that. Typically, the top post in our X account has those scripts. If this was helpful to you today, go ahead and smash the thumbs up button on your way out. That'll let others know that you found the content useful and helpful. You'll be doing a complete stranger a favor by doing so. And then, of course, be a subscriber. Very good, you guys. Thank you so much for your attention, James. Thank you for your help out in the chat. Yeah, we'll take a 15-minute break in our programming and be back with swing trading with Mike Fairborn at the top of the hour. We'll see you then. Bye-bye.